money day, guys and girls. Hope you guys are blessed. Now, we start the year off with a bang. We've had XAUUSD do a complete mad move. Now, I'm going to show you guys how I was able to make over $20,000 in under 5 minutes. So pay attention, guys, and let's get straight into this. Now, first thing what you want to do, guys, before it comes to you guys taking any type of trade, okay, you always want to have a look at the higher time frame so that you can have an understanding of what's actually happening. Now, with that being said, I can see here that we had a huge wick to the upside. Gold made an all-time high, which was incredible, okay? We also gold make an all-time high, but then gold started coming back down. So essentially, when gold started coming back down, that gave us an indication to say two things. One, price has made a higher high. Two, price could now potentially be on its way to making a higher low. So we come out of the monthly and we go down. We refine the time frame down, which is lower, into the weekly time frame, and we have a look on the weekly time frame. We can see gold made the higher high. Okay, price came down to make the higher low, and since price came down to make that higher low, the next thing we needed to see was for gold to make a higher high. If it had made a higher high, that would confirm to us that we are still bullish. Okay, so on the weekly time frame, there is a key note that I want you guys to understand. Anytime price fails to make a new high or a new low, this is a major indication for price about to shift. What do I mean by that? Well, when we stop getting higher highs, okay, or higher lows, or excuse me, when we stop getting higher highs or lower lows, that is an indication to us that the market is probably thinking about turning around. So based off of the weekly time frame, what we could see if we take out this weekly candle and we go back to last week, what we can see is that price had already failed to make a new high from the 1st of January. The last week of December, the 25th, that week we can see that price failed to make a new high. So the only thing we could do is wait for the following week. Okay, the following week also showed us some more bearish price action, and in actual fact this candle still showed us some bearish price action because the bullish candle was once all the way up here, but then it closed down here. So we could understand already that the bears started to come into the market, and that was further anticipation of us seeing a pullback because of course we just saw gold make an all-time high. So because we've seen now prices failed to make a new high, this is an indication to us that we possibly might start to see price come down and create a low. So as we go on to the daily time frame, we can see here that of course we did have this high taken, but naturally if we take away these last 3 days of price action, naturally on the daily what we start to understand now is that although price has made a new high on the daily, we still want to see a higher low. We want price to come down and turn around and push higher. Now, whether price comes down and turns around is irrelevant because what we're anticipating is price coming down. That is the key thing here, guys. We want price to come down. So I'm going to go on to the 8-hour time frame and I'm going to show you guys the drawings that I've had marked out here. On the 8-hour time frame, I marked out this bullish candle which made the new high, okay, because this candle to me signified when the market makers entered to actually start to prepare price coming down lower. We call this a buy to sell candle, an institutional candle. So we had price of course come up into this institutional zone. It consolidated a bit inside of this range, but essentially price pushed down lower. Now, if we go on to the 6-hour time frame, because the 8-hour as well as the 6 isn't enough for us to buy from, but what we can see from the 8 and the 6-hour is that price has reacted from this eye candle. Okay, it's come down lower, it's created another institutional candle here, price has come down lower, and we've made another institutional candle here. But none of these candles are showing us where I've been able to take the entry from. In actual fact, this candle here on a 6-hour could show you where I've taken the entry from, but for that we need to refine it into a smaller time frame again. So on the 4-hour time frame, guys, we can see the imbalance that was created here, which eventually was filled as price pushed all the way up to here, right? Now essentially price came up to here, okay, failed to make a new high, and then price started coming down lower, taking out the lows. So if we go onto the line graph, we can see we had the higher low here, which price came down and took out. Okay, we had another higher low here, another higher low here, another higher low here. Now, of course, price is all the way down here, but if we just stick to where we are up here for a second and believe that because price failed to make a new high, we started to see this high low taken out, which meant the structure had changed from bullish to bearish. This higher low was taken out, which meant the structure had changed again from bullish to bearish times 2. So we started to understand that the structure was changing. Okay, it had already changed. And in actual fact, I want to go down to the 1 hour time frame and show you guys that from the 1 hour time frame, when this equal low was created, I saw, if I go on to the 15-minute time frame to give you guys the real good source here, the real good source. On the 15-minute time frame, guys, you've got 3 bearish candles, which created a large amount of imbalance on this candle and this candle. Now, I said to myself, because price has taken out this low, we are now making lower lows and lower highs. Therefore, when price pushes back up, I'm going to anticipate that being a lower high. And what happens? Price pushes up, it fills the imbalance, and I decide that when price reaches the bottom of this bullish candle, I decide to get into the trade. Now, when I get into this trade, I do have to bear in mind a couple of things. One is that I have to cover the range. This range above here, this previous high, I need to cover it to protect myself, because price might push up to complete more of the imbalance here or even the imbalance over here. So I protect myself by covering this range, which means I have quite a large stop loss area, but it does mean also providing this trade. And if you guys can remember, I'll be sure to put these on the screen. I mentioned inside my Telegram as well as inside my school community that this trade is a trade I'm entering, which I believe might take a couple of days to play out. So I didn't enter this trade believing that we was going to get the result as soon as we got in. I did think this would be a bit of a swing trade. Okay. And essentially we jumped into the trade. Price started coming down. It hit our take profit 1, which you guys can see on the screen now. Okay. And eventually it hit our take profit 2 right before NFP. On Friday, when the NFP news came out, price actually pushed back up, which triggered us into another sell. Now I want to show you guys on the 2 hour time frame, this candle looks really clean. On the 4 hour time frame, the candle looks even cleaner. Okay, we had a nice pullback, which triggered us into another sell, which we had from a sell limit, and price continued pushing down lower. Now, as it stands, guys, I'm no longer in this trade. I've had 3 successful trades with this pair, meaning when I jumped into this trade, I entered 3 positions. I was able to cash out on all 3. At one point, I was up $12,000 on each trade, and I left it overnight. And when I woke up the following morning, the profit was a lot lower. It was around $7,900, which you guys can see on the screen. So you have to understand, guys, it's not always important. Guys, to hold trades just because you believe in it. Sometimes you have to be grateful of what's currently on the screen, and that's profit. Profits are always going to be a lot better than wages as long as you know how to take them and not be in such a rush to give them back to the market. Now, because I was in the trade for around about 4 days, to me, I had paid my dues. I paid my dues. Okay, I didn't want to hold this over the weekend. I never like to hold trades over the weekend, so I needed to understand if I was going to get into this on a Monday, by Friday, which happened to be NFP, I need to kind of be out of there. Now, first things first, if you're watching this on YouTube or wherever you've watched this video from, just take the time, if you can, to just smash the like button. It really goes a long way, so I appreciate you guys for that. And the second thing is to comment below. Comment below if you guys trade gold, how your NFP was, if you trade it, if you stayed out of the market, but also if this makes sense to you. We've covered a top-down analysis. We've gone from the monthly time frame to the weekly to the daily to the 8 to the 6 to the 4, right down to the 15 minutes, just so that we could refine a candle. Now, I want to tell you guys the most important thing that you guys should take from this video is the fact that I used the market structure to understand the direction of the market. Once we found the market structure, we then went and we highlighted the institutional candles. After highlighting the institutional candles, we then should look at the Fibonacci, because once the structure is broken, we of course want to be getting in when there's a pullback. Now, what I've done is I've used the imbalance. Instead of me using the Fibonacci, I've used the imbalance to time my entry. But it goes without saying, guys, if I was to use the Fibonacci, you guys would also be able to see that the entries would also be crystal clear too. So if we have a look here from this swing high to this low, we can see price pushes back up into the 62/70% range, which is our sweet spot. And of course that falls in line with our eye candle as well. So when you guys become really good at trading, you'll find that the candles that you're highlighting will always be in the areas that you want to be getting into the trade anyway. So there's 4 confirmations that we've been able to ascertain when it comes to trading gold. And you guys have seen the results. So all I can show you guys and tell you guys is, look, right now gold is pulling back and it's filling the imbalance. But because today is Tuesday, which isn't a bad day to trade, but sometimes I always believe in pairs don't move every single day. Some days pairs are going to be slow. Some days, some weeks, you might have to wait before you get the right trading opportunity. A classic example is this. We had an all-time high on the 3rd of December. Price only came back up there 24 days later, 25 days later. It took 25 days for gold to come back up to this high for us to potentially find the right sell. 25 days. So if there's anything you can take from these videos, guys, is sometimes time is the best and the most important teacher, because it's going to make the picture a lot more clearer. So I don't want to ramble on anymore. Okay, it took me 5 minutes to break down how I was able to get into the trade, and it took me another 5 minutes to explain to you guys the psychology and the discipline you need to have when it comes to taking these trades. 2024 will be your year as long as you guys can be patient. This game is a transfer of wealth from the impatient to the patient. So as long as you guys can be patient, as long as you guys can understand that it may take 15, 20 days sometimes for your trade setup to be ready, then when it is ready, guys, I pray you guys should be a lot more profitable, you guys should be a lot more persistent, and you guys should be a lot more patient. I have been your host, Learning with Vel. Today, of course, if you guys have appreciated this video, be sure to share it with a friend who could learn from this. But always remember, guys, every day is money day. Until next time, peace.